Everybody's telling you to open a high yield savings account.
Instead of putting your money in a regular savings account, put your money in a high yield savings account so your money can grow even faster.
People tell you that a high yield savings account is a great place to keep your emergency fund and your short term savings. But is a high yield savings account really that great? In this video, I'll be going over everything you need to know before opening a high yield savings account. I will be going over the true pros and cons with no BS. Don't forget to smash that like button and subscribe for more content just like this. Now let's take a look. First, let's go over some pros of a high yield savings account. The first pro is that high yield savings accounts have a high APY or annual percentage yield. With the high yield savings account, you'll earn more interest on your money just for keeping inside the bank. For example, if you had $5,000 to save, here's how much interest you could earn in a high yield versus a traditional savings account. A traditional savings account with 0.1% APY would give you $25 after 5 years. With the high yield savings account with 4.3% APY, you would make $1,171 after 5 years. The exact interest earned would depend on a lot of factors, like how often your bank compounds this interest and whether or not your rate changes over the years. If you look at the amounts of money between the two accounts, it's really insane to see the difference between the two accounts. The second pro is that high yield savings accounts are FDIC insured. Most high yield savings accounts are FDIC insured for up to $250,000 per depositor per bank. This basically means that the FDIC will reimburse you of your money in case the bank goes out of business. This is a great feature that helps you feel secure knowing that your money is insured in case of bank failure. The third pro of high yield savings accounts are that they have very few fees. We all know that high yield savings accounts tend to be available through online banks. Most of these banks don't have branches with in-person customer service, so they simply just cost less to operate. So this means that high yield savings accounts can offer you higher rates and charge fewer fees. Most high yield savings accounts also charge 0 monthly fees. The fourth pro is that it's super easy to withdraw your funds. Your money in your high yield savings account is very easily accessible and can be withdrawn anytime. That's why these funds are so great for emergency funds or short-term savings. The fifth pro is that high yield savings accounts have many online account tools. Since most high yield savings accounts are offered by online banks, they usually have many useful tools. These include mobile apps that let you quickly view your account balance, pay your bills, transfer funds, and more. Now, let's look at some cons of high yield savings accounts. Con number one is that the interest rates fluctuate. That 4 or 5% APY that you're getting right now is not permanent and it can fluctuate anytime. If the Federal Reserve decides to reverse course on interest rates, the high yield savings account rates will probably follow. Con number two is some accounts have withdrawal limits. Some high yield savings accounts charge customers if they make more than a set number of withdrawals. And as a result, if you tend to move a lot of money out of your savings accounts frequently, this could be a small issue. Con number three is that withdrawing your money might take a couple more steps compared to a regular savings account. Because most high yield savings accounts are online and don't have physical branches, an extra step that you might have to take is transferring your money from your high yield savings account into your checking account first. From there, you'd be able to withdraw your money. Con number four is some high yield savings accounts have minimum balance requirements. This basically means that you must maintain a certain balance or a certain amount in your account to get the best interest rate possible. For example, if your high yield savings account requires that you deposit $5,000 for the best interest rate, but you only deposit $2,000, that means you'd get a lot lower interest rate. Con number five is that it's not a good place for long-term savings. Yes, high yield savings accounts pay you a lot more than regular savings accounts just for keeping your money inside the bank. But the interest rate that you usually earn does not keep up with inflation. So this means even though your money grows inside the account, your buying power decreases. You can avoid losing buying power by investing into something like an index fund that tracks S&P 500, which has had an average return of around 8 to 10% per year. Investing really is the only way to make your money work for you. Now the big question you're probably asking is a high yield savings account right for you? In my personal opinion, a high yield savings account is great for anyone. Why would you not want to get paid more interest just for keeping your money inside the bank? Let me know what you think about high yield savings accounts, and if you have one, down in the comments below. That is it for today's video, guys. Thank you so much for watching. If you're new here, my name is Paul and I talk all things money, finance, and investing. So if you like this type of video, please smash that like button and subscribe for more future content just like this. Your life is a masterpiece, so let's unlock your full financial potential together. And with that, I'll catch you in the next video. Take care.